What's up, everyone? It's Tanya Trades. Welcome back to my channel. So I've been getting a lot of requests for me to explain my strategy. So I'm just going to get right into it. So basically you have two kinds of trades, right? You have a continuation trade or you have a reversal trade. So I approach these two different kinds of trades differently, right? So for the continuation trade, I look for a point of interest, like a fair value gap, to buy into. If I'm taking, this is another way of thinking about it. Internal to external liquidity is your continuation. And then external to internal is your reversal, right? So the continuation is actually easier because you already know it's going for some sort of external liquidity and there's some sort of market structure shift that already happened. So that's why I'm actually not looking for a market structure shift within this area. I'm waiting for simply like a down close candle to get broken above. I'm going to add some examples in a second because typically there's already a market structure shift already happened, right? Something like this already happened. And then for the reversal trades, that's a little bit more, needs more confirmation, right? Because now we're trying to time a reversal. So I need a break below a short-term low. It needs to close below it. And then ideally there's a fair value gap here to short. So I'm going to put in a bunch of examples. Okay, so here's an example of a continuation trade taken in the afternoon. I already knew that the narrative was bullish, so I just waited. It came into a 15-minute fair value gap. That's the black line at the bottom. And as soon as it broke above that down close candle, especially it's a large closed body, I basically bought into the fair value gap. I didn't really wait for a market structure shift or a breaker entry. Although you can, that's typically the next step in the market maker buy model, and that's totally fine as well. But a lot of times it also just doesn't happen. Sometimes it'll just keep ripping from there. But yeah, that's how I trade continuations. So that's the change of standard delivery. It needs to break above the down close candle that took liquidity. So you see that large down close candle, that's the one that went into the 15-minute fair value gap, and it also broke that wick low before it. And then it created a large displacement up with a fair value gap. That's your change of state delivery. So I bought in that yellow fair value gap instead of waiting for the breaker entry there. And then I targeted the equal highs.
Okay, so here's an example of how I start out my day. I look on the weekly. I notice that the consequent encroachment of the weekly wick is a level I was looking at. And the day before, we closed below that level, along with closing below the swing low before it, created by those three candles, along with another swing low. So my bias for the day is bearish. I think that we're going to continue lower. And then I mark out some daily levels like that wick from that swing low that we broke below, and it's also a order block. So it looked like it already rejected from that sensitive level. And then over here, I'm marking out the pre-market price action. I don't really do this anymore because I can see the lows clearly, but I used to do this. So we were opening in the middle of that range, so I wasn't really interested in taking any trade yet. But then there was a market structure shift. It broke those lows with a fair value gap. So then I knew this was a continuation trade and it left a fair value gap. So I was looking to short within that gap. So here I'm marking out some standard deviations as potential targets. I also see a low lines up with that. And here I'm getting filled within that fair value gap. I feel okay putting my stop at the top of the order block's body because it already left and broke structure from that area, so we shouldn't come back all the way up there. Also, that's a pretty large fair value gap, so you can put your stop there then. Or even at the top of the candle that made the fair value gap, if it's a large one. And here we have already a nice strong reaction lower. I'm looking at the higher time frame on the hourly. So we see there's a nice strong reaction, a large down close candle after. Those are the best kinds of trades, and that's how you know you're in a low resistance liquidity run. Whenever we break a low with a fair value gap lined up with that, that's always one of the best trades for me. That's pretty indicative of a low resistance liquidity run when that happens because there's a large displacement there. And once price comes back into that area, there's going to be people that are trying to mitigate their positions who were long before and they're switching to short to try to get back into the move lower. And then, of course, reminder that we had a reason to look for lower prices from the daily chart. And the reason why I just went short into this fair value gap was because the stop was permissible. Like, I was okay with taking, if it's less than a 20-point stop, I'm pretty much okay with taking it. If it's larger than that, then I'm going to wait for the reaction within that fair value gap. So over here, I'm also just marking out the 0.5 extension of the fib of the move up during the pre-market. And I take that as my first partial because I think even that's like a 3R or like a 2.5R. Yeah, 2.5R. Okay, another continuation example. We break that low with two fair value gaps lined up. I just shortened the first one and I put my stop above the second one. It was less than a 20-point stop, so I was okay with taking that risk. And I have obvious sell side. So again, like right here, I'm not waiting for a market structure shift within that point of interest. The key is knowing it's a low resistance liquidity run because it broke that short-term low with fair value gaps lined up to it. There's already been displacement and a quick run, so you just want to get into the continuation. So here I marked out buy side. It was already taken out. It's buy side from the hourly time frame, and then I had a strong reaction lower from it. I'm noting here we already had our fair value gap and then we closed below it, so we are not supposed to come back up to that level. And it's looking like a market maker sell model. So I'm trying to get into the next distribution of the market maker sell model. So here I'm shorting within that fair value gap right there. I put my stop above that higher fair value gap because we didn't close below those lows yet, and I figured we could have had another like drive or liquidity sweep into that higher fair value gap. And it was a 13-point stop anyway. And then once we close below that low, that's when I bring my stop down. And while I'm in a trade and taking partials, I'm monitoring where 3 PD arrays would be violated, and I typically put my stop there. So here, like a fair value gap in an order block and another fair value gap would get violated at my stop. And then once we break that low one more time, I bring the stop above to the order block. I note how we close below that low. And here I'm marking out that order block we just rejected from. Then I bring my stop lower because I think that should be like a 3-drive pattern to go lower. And we get filled. So in this trade, we have a fair value gap and we have price taking out equal lows, all those little wicks, into the fair value gap during the 3 p.m. macro. So time is important here. We left a bunch of equal highs. So again, here I'm looking for that down close candle to get broken above, and there it is. And I'm putting my fill right at the open of that down close candle, and I buy. My stop is at the low. Here I'm pyramiding into my entry at a prior order block. So then when I'm in the trade, I'm marking out the previous short-term high and I want to see the reaction to it. See over here, I see it stalling, so I get ready to pyramid again. I mark out a 5-minute fair value gap and I add to my entry. I think that they're generating those equal highs, right? So then I opt to take my partials up there. And then here, I'm looking at the reaction to these highs here. I want to see, does the candle close above? And it did. And that's when I start moving my stop up. And I got stopped out in profit here. Here we broke the day's lows with a fair value gap. So I'm watching for a reaction. We're near the lows of the day, so I'm not just going straight into this one. I'm waiting for an up close candle to get broken below. And right here it happens, so then I go and I put my fill at the open of that candle. I put my stop at the top of the 5-minute fair value gap. There's sell side below. This is important. I was bearish and there's sell side below at that black line. And this is happening during the 3 p.m. macro. I take a partial at that low. And then the target gets hit. And by 4 p.m. we do hit that sell side liquidity, but I am happy with my target. I'm content with enough.
All right, and here's some examples of the reversal trades, like actual trades I've taken.
So here our point of interest is a 4-hour fair value gap, and we broke above a short-term high with a fair value gap. So I'm looking to get long in that fair value gap, which I do, right there. I put my stop below the leg that created that fair value gap, and also those would be 3 PD arrays that would get violated on the 1-minute chart. I do believe I marked out the wrong breaker here. but it doesn't really matter because that could be considered a mitigation block. As we displace above that, then I bring my stop up, because now we shouldn't come back. That price range is now balanced, so we shouldn't come back all the way to that low. I put my stop below 50% of that order block, and that's actually exactly where price ends up coming down into. So I'm always highlighting the PD arrays. I'm looking at that fair value gap, but I'm also noticing like, okay, we could also come back and dig into the order block before the move up. That's a highly sensitive area. Right here, I think it's like pretty incredible to watch it in action. I highlighted that 50% level. That's exactly where price bounced. And then we create a breaker block on the left, and price starts expanding towards the buy side liquidity. Here's a case where I took ES instead of NQ because ES had stronger structure. And I take this on the 5-minute. To me, if I see price action is clean on the 5-minute and the stop is fine, like the stop loss would be fine for my risk, so I'm happy to take that play. So it comes back into the breaker block and the fair value gap. ICT calls this a unicorn because it typically has a very strong reaction to that area, because people that were short beforehand and got stopped out, they're trying to get back in long to mitigate their positions. And this is important to happen if the morning took out the sell side liquidity, which it did here if London lows were taken. And then here I'm monitoring that high that it made, and I want to see the reaction towards it. So once we break above it, I'm bringing my stop up. So you can take a partial there. I didn't because I wanted to see the 5-minute candle close above that high, but it ended up not doing that. I moved my stop down to where 3 PD arrays would fail on the 1-minute chart. Now I'm noting that high that it created, and I want to look at the reaction to that. And that's going to be what determines whether I bail on the trade or not, because there's a large wick created there as well, and it looks like it's rejecting at the midpoint of that wick. So I saw price was pretty much stalling on the 1-minute when I wanted to see stronger move up expansion, so I did take a partial there. I put my stop 3 PD arrays below it. And here I'm marking out that high. I want to see a reaction there. I see we're not closing above it. We're not expanding. We're stalling too much. So I end up just moving my stop up to that low because I don't want to overstay my welcome in this trade, especially if it's lagging. So then that's indicative of like a potential area where price is going to reverse in a high resistance liquidity run. So here I'm noting that NQ on the hourly and on the 1 minute chart has an SMT with ES. I'm looking whether it's going to close below that short-term low that we just had. Here it is, it's closing below with a displacement, so I'm interested in going short. But I'm being patient here. It takes 3 minutes for a 1 minute fair value gap to be created. I'm looking at the 30-second here to see if anything happens, but it doesn't. Not another fair value gap is not created, so it's totally fine. We go short in this 1 minute fair value gap. We put a stop above the candle that created the fair value gap because it is a large displacement. It's a large fair value gap, so it's totally fine to put it there. And plus we closed below that low before the high. So price shouldn't come back above there or else it would be too messy. Because price is already balanced above that high. We offered sell side and buy side. I'm always picturing that paint roller when I'm looking at price. So here we have price traded into a 15-minute fair value gap, and we displaced above a short-term high with a fair value gap. I put my stop way too tight at first, so I was just re-enter. Like, we didn't even break the low of the leg that broke above that short-term high. And since we came back into that wick, we reacted nicely. I decided I just put my stop below that wick. I'm looking at that high created before the low because that is a potential breaker block. So I have that marked out. If we break above it with a fair value gap, that's a good sign that we're going for even higher prices. Here, there's no equal highs, so I'm just taking low-hanging fruit. I think that price is going to reach back up into the higher fair value gap. That's where I take my partials, and those other lines are some standard deviations of the manipulation leg. So here's an example of a long reversal trade. You had the previous month low as a point of interest. It also broke the 9:30 low, and then at 10 a.m. news, it broke a short-term high, left a fair value gap. So you go long in that fair value gap and you target equal highs.
So yeah, I hope that clears it up. And if you enjoy this video, please like and subscribe to the channel and turn on notification bell so that you know when I post a video. And thank you guys for your support.